Today we were looking good until we heard Apple slowing the pace of its hiring, which caused a wholesale rush to the exits. The Dow sinking 216 points, the S&P slipping 0.84%, NASDAQ losing 0.81%. Sell. This kind of hiring thing that Apple's doing is always viewed negatively in the tech world, even though Wall Street's desperate to see less hiring. Why? Because it means the Fed's winning its fight against inflation, and that's what this market's all about. Of course, part of this pullback is because we had huge gains on Friday, and we were due for some weakness. In this environment, it's always going to be fragile on the upside and easy on the downside because the bears, they got an upper hand. Just keep in mind, you should never buy this market when it's up. That's a fool's game. One should wait for weakness like we had today before you ever pull the trigger. If you're thinking about buying something that's about to report, why not wait until you hear what they have to say? Just look at what happened to the formerly strong IBM, one of the best performing stocks in the Dow after the close. It got completely sell. If you bought it ahead of the quarter, you rolled the dice in a casino that's not friendly to blind dice rolling. And make no mistake, before the Apple chatter, today was good. Hey, make that great. And then suddenly ugly. All the way to the close. This morning, Goldman Sachs reported a great number that came out of nowhere, frankly. I was blown away. All divisions doing well, especially trading. Goldman's a cheap stock with a great yield, and I think it's a buy. More on that later. This is just the latest bank to report a much better than expected quarter, following on the heels of Citi. Did you see that quarter? It was great. Wells Fargo, yes, thank you, Charlie Sharp, for doing a good job. And Morgan Stanley, James Gorman, always doing a good job. The banks now represent a tremendous leadership group in this market. Of course, Bank of America also reported a good set of numbers. This was its usual consistent quarter, but it could only muster a yawn. I think the internals were terrific. And I got to tell you, the leverage to the Fed raising rates is superb. We're talking about like $1 billion per 0.75 point. Stock deserved more love than it got today.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.